What's going on, everyone? Inflation data came in hot this morning and sent the markets lower. 86% of stocks in the S&P 500 finished in the red. Looking at today's heat map, it was a sea of red today. There were only a handful of stocks that held up just a little bit. But in today's video, we're going to cover what actually happened in the market today and what's going on with this rate cut situation, because it's getting pretty crazy pretty quickly. And at the same time, there have been some pretty big developments on the, I guess you could say, a world view side of things that I haven't seen too many people cover, but have some big implications to the stock market. So stick with us all the way until the end today. We do have a lot to cover because a lot happened. But with that being said, Tom, let's not waste any time and let's jump right into it.
Yeah, as you can see, the S&P 500 had a massive sell-off this morning right before the market opened, ended up falling all the way down to around 511 after in pre-market it was sitting right around 520 to 521. So that sell-off was pretty massive, especially considering the big move towards the upside end of day yesterday. But Mike, we actually warned about this. We've been talking about key inflation data for a while now, and as we can see on the chart, inflation came in a little bit hotter than expected, around 3.5%. That's on the year-over-year rate, and even the core inflation ended up popping up too. But as you can see, the past three inflation readings, or at least the past two, are showing that it's ticking back up a little bit, and that's not a good sign here in the short term. Everybody's been talking about rate cuts. What is the Federal Reserve going to do with rate cuts, Mike? Are they going to end up pausing? Are they going to ease? One of the big things that happened today is that we're actually now seeing a pause for June, which we talked about. If inflation gets higher, they're going to probably end up pausing for longer, like they've warned us. And also, in July now, that's actually being priced in for a pause. So, Mike, it seems like the flip-flop even switched over to July as well, which we were expected to get a little bit lower there. So that's a pretty big revelation. And I'll scroll back up to the other chart that we've shown all week. But yeah, it's changing pretty rapidly here on this data today.
No doubt, and I love to see it. It's going to bring some awesome trading opportunities in the short term. And just to summarize everything for everyone, basically when this year started, the Fed basically said we're going to see, between 5 and 6 rate cuts for the year. And that has changed quite a bit, as current market pricing is certainly not expecting that anymore. It looks like by the end of the year, we might get 2 rate cuts, depending on how inflation goes. But like you said, Tom, the next rate cut isn't really expected until around September at this point, and it really just depends. If sentiment keeps weakening, we might not see a rate cut expected at all this year, and that's such a giant shift from what the sentiment was like when the year started. And I think it could get a lot more crazy than anyone even thinks, and you'll see why as we get deeper into today's video. But what's so interesting is that as the inflation data came in hot today at around 3.5%, yes, the market fell like a decent amount, but let's be realistic. It's not like we saw the market down 5% today, right? It only finished down 1%. And as anyone who's been trading for the market for some time and knows, it can fall a whole lot more than that. And one thing I especially wanted to emphasize, because as I saw this drop this morning, I saw traders reacting as if the market was down 10%. I was like, guys, this is a 1% drop. If you think this is bad, you have no idea what's to come. So I just want to say, make sure you're not over leveraged. Make sure you have some protection in the event the market does continue lower, especially as we go throughout the rest of this year. But the inflation data coming in hot sure wasn't a good sign to see, and I know Powell isn't feeling the best today.
Yeah, he must not be, Mike. I mean, we're going to need him to come out and really sway things next time, but it's not looking good. And I think that pullbacks are actually healthy for the market, even on the last powerful uptrend. Last August through November, we saw a pretty big pullback happen in the stock market. And I think that we might be due for another pullback like that. Now, I'm not saying it's going to necessarily be the same size of a pullback or anything, but this data definitely does not help. And in the short term, Mike, the SPY fell a lot in pre-market and then started consolidating a lot today. And what I like about this is that it actually created a bit of a range. And if we start to see the market fall under this like 511, 512 range, I think we could see a much more significant move down over the next few days and even few weeks. But I wonder how long it's going to chop around for before that finally happens. The thing that I like, though, is that relatively it stayed fairly close to the low of day today.
Good point. It did hold up very well because in pre-market, it was looking pretty nasty. Like, it was just falling like a rock. And I think one thing that really helped it stay up today was the way some of these big tech stocks like Nvidia moved. It ended up popping by around 2% today. Nvidia did, and it held strong all day long. So I think like the most important thing in terms of like a day-to-day sentiment analysis goes is look at these big tech stocks. Nvidia, Apple, Microsoft, Meta, and stocks like that have like have a heavier weighting on the market than like any other stocks out there. So basically what those big tech stocks do has a direct influence on what the market will do. So keep a close eye on them each day because they are just so important to the overall market right now. And another thing we have to talk about is that ExxonMobil actually made a brand new record high today. And this is happening as oil prices and energy prices keep on marching higher. What's kind of scary about this is, well, at least two things. The first thing is that if we continue to see energy prices climb higher, guess what's going to happen? Inflation will also go up because, just energy prices going up has such a big influence on everything, right? So that's a giant risk. And if we do see inflation go up, that, has a ripple effect into the whole market. But another very important risk with you could say oil prices and energy prices going up is what we have happening around the world right now, specifically in the Middle East. So check this out. Basically, the United States has kind of been warning that Iran might launch a missile attack on Israel. And then Israel basically said, if Iran launches an attack on us, we're going to be ready to respond. And the main thing is that tensions are increasing in this area of the world. And as we all know, this has, this area of the world is big with oil production and just oil prices in general. So the more tensions you see surrounding these conflicts, the worse it is for oil prices because they keep going up and that impacts inflation and everything else, let alone the fact that just tensions and war are increasing around the world. So keep a close eye on this event.
Yeah, and even Biden had to issue a warning today. He pretty much said that, they're going to stand with Israel, which most presidents have always historically done, at least over the past however many years, right? But at the end of the day, these are huge events that definitely influence inflation and the tensions, which definitely move these oil stocks. I know that a few of these oil stocks like Oxy and even ZOM, which ended up popping up today, had kind of been flat here to start this week. So I'm really glad to see it starting to run. And ZOM looks like as it broke above that recent high, Mike. I mean, if it starts to go on another run up above this channel, that could be a pretty significant move. So definitely keep these oil stocks on the radar for the next couple of days. We've been talking about them quite a bit. I know they went flat earlier in the week, but they're starting to heat up again.
True. I mean, when you look at the market right now, yes, it has been slowing down a little bit, but I think just looking what's happening around us is super important. We are seeing, like I said, some major stocks cool off a little bit. We're not seeing like any like serious crash or anything like that, but we're seeing a lot of money flow into those like safe haven assets or just areas of the market that would do good in times of increased market stress. It should be no surprise that oil prices are rising up with gold prices as well. That says a lot, right? If investors are rushing into gold, and then in this case, oil, given what we have with going on in the Middle East, that tells you that, there's a reason they will want to do that. And in this case is because there is some serious risk to the market. And if those risks do end up playing out, those assets have a lot to gain from it. So continue to keep a close eye on oil related stocks. So of course you have like ExxonMobil, Chevron, OXY, and just, a million and one different oil related plays, but also keep a close eye on gold, silver, GDX, which is a gold mining stock, because that's where a lot of the money's been flowing lately.
Yeah, it really has, Mike. We've been talking about a lot of great big money plays on these different stocks, too. A lot of them are up well over 100%. I know that there's even been some on ZOM and Oxy and a couple other of the oil stocks over the past, year, 2 years that have done very well. So looking at the oil, though, from the beginning of the year to now, it's actually up around 20% plus already. And, whenever I zoom out on the chart and I start to look at oil, in a longer term sense, the last time we had a lot of those global tensions with Ukraine, oil exploded all the way up to $130 almost. I'm not saying that we're going to get all the way back up to there, but I could definitely see oil maybe retesting this 94, 95 resistance, if not even $100 or a little higher over the next few months if these tensions continue to rise. And it just seems like they're continuing to get worse and worse, Mike. And we always know that it's like a melting pot, right? It's just ready to boil over soon.
The number one most important thing I want to say is whether you're looking at oil or gold or big tech stocks or inflation or interest rates or anything like that, is make sure your portfolio is going to be okay if the market does pull back or if we do see some of these big risks that we're talking about play out. Because the last thing you want to happen is for, let's say, these developments to play out and then you're left holding super far out of the money call options on big tech stocks, and then you blow your whole portfolio. Make sure you're protected. I'm telling you, like I said, when I saw the market down 1% this morning and a bunch of traders freaking out, that definitely caught my attention. And another thing worth noting is that these changes that we're seeing in the market right now are normal, and they've just been happening since the market has been a thing, you can say. It is only natural to see some areas of the market have times where they outperform, and then eventually, that slows and other areas of the market, take their spot, right? Over the past year, big tech and AI and crypto has seen a lot of the major inflows, but over the past couple of weeks, they've definitely been slowing, and that money has been flowing into other areas of the market. So just wanted to throw that out there. But Tom, looking at the market right now and going back to the SPY, what would you say are the main levels to watch going into tomorrow?
Yeah, so for me, the biggest level right now is this 512 support. I know that in pre-market, it got down to 511.25, somewhere really close to there. So if it does break below 511 to 512 tomorrow, I think that's going to be a huge level to watch. The SPY was really consolidating pretty hard today, and I really like the way that it held down. I think that was actually a really good sign to kind of see it holding down the way that it did. So if we do start breaking under 512 tomorrow morning with some good momentum, I think that looking at maybe UVXY or just even puts on the SPY could be great. There were a lot of great posts today in the profits channel of a lot of great trades that people took. So if you guys make some good trades tomorrow, definitely post them up in the profits channel. And as far as levels to the upside, I really like this intraday resistance around 515 and then 516 after that. Those are the main levels I'm watching up. Of course, I am watching 520 and 521 overhead, but I don't know. I kind of doubt we get there tomorrow.
Yep, we shall see. And while this week's major events have passed, what else do we have on the economic schedule and then earnings?
Yeah, so for tomorrow, there is actually a few Fed speeches and then the 30-year bond auction and then even PPI data coming out in the morning, 1 hour before the market opens. So there's a little bit here. You guys can screenshot it if you want there. And then on the earnings, there's nothing really tomorrow unless you're playing Constellation Brands or CarMax or something. But going into Friday, that's really the big day for earnings with all the big banks, Progressive and State Street as well. So that's pretty awesome, Mike. The end of the week will be very exciting. But for tomorrow, I think really just those Fed speeches and the auction will be pretty important. But obviously, I think that the main move is still going to kind of piggyback off of what happened today. And I think traders are going to, like you said, there was a lot of traders that were freaking out this morning, running towards the exits, and it was just a 1% drop. Imagine if we start to see another massive move tomorrow. It's going to start to snowball pretty quickly.
Yep, so we shall see. Well, let's get right into the good stuff for today, which are some setups for tomorrow. And a stock I'm watching very closely right now is BABA to the upside. This is a Chinese stock, and the reason I'm watching it very closely right now is, one, it's been uptrending in a great way, but also two, Chinese stocks kind of do whatever they want with the market. They have very little correlation to U.S. markets, and they just move independently, which I think is a very good trait to have in this market environment. They're they have been seeing some pretty good inflows lately as well, so I am going to watch this one to the upside. It does tend to gap up quite a bit. And like other setups, the more momentum, the more volume, the better the news is with the stock, the more explosive the price action can be. So depending on the price action tomorrow, the more it's up and the more pressure it puts on the high of day, again, the more potential there is. But I am watching this one to the upside.
Yeah, it's not bad. The China stocks all gapped up pretty well today. I thought they were having pretty decent moves at open. With my first play, I'm going over to CCJ. It's not necessarily an oil play or an energy play. I guess you can call it energy, right? It's uranium, but I am looking for this one to kind of break this resistance around 49.40. If it starts to break that, I will look at more calls. It's been consolidating with energy over the past couple days, and I feel like it'll start to move with those oil stocks tomorrow. So let's go ahead and look at CCJ to the upside.
Sounds good. Another one I'm watching pretty closely is Meta, and it's to the downside. I have been talking about this one quite a bit in the past couple of videos, and I would love to see it get back down to that $510 area, and then just put some good pressure on that low of day. In order for me to justify trading this one to the downside, I would also want to see the overall market down, and then just weakening and downtrending, as it would make it much easier for a big tech stock like Meta to fall lower. But again, I'm watching Meta to the downside, but I want to see it get back to some of the lower areas over the past couple days.
Yeah, that would be pretty big here. If Meta starts falling off, that would put a lot of pressure on the overall market, especially if these weaker tech stocks today like Apple and Microsoft also continue down, and then the actual ones today that did a little better like Meta and Nvidia, if they start turning red, that would be pretty monumental tomorrow. So I'm definitely watching for that. But I mentioned Apple there, and Apple's been pretty big lately. We've been watching a huge level on the book map over the past couple weeks, or couple days, right around the 168 support. So this is pretty big, guys. Today, this morning, Apple actually broke that support today. You can see right here on the volume dot on the left side of your screen, there was 102,000 volume that happened when that value or when that level broke. So that was a lot of volume within that split second right there, Mike, and it sent Apple a little bit lower here. For tomorrow, if it starts to break back below 167, which is another major level here on the chart, I'm going to go ahead and look at puts. I think Apple could be one of the bigger tech stocks out there that starts to push the market a little bit lower, and it's been pretty weak. There's been a lot of negativity with Apple lately as well, so I'm going to keep watching it down. It's been doing pretty well actually over the past couple weeks to the downside as well.
Sounds good, and that 168 break was pretty big, so good eye there. And with that being said, let's jump right into today's momentum plays. And with the first one, we have UVXY to the upside. And how can we not cover this one on one of the bigger market red days that we've seen in some time?
Yeah, exactly, right? I think that intraday, if it ends up getting above $7.20, you could probably look at calls at that point. Like, if we start to see this shoot up with some good momentum, then the overall market will probably be falling off pretty good. So if it breaks 720, then look at calls.
All right, with the next one, we have Lockheed Martin, or ticker symbol LMT, to the upside. And Tom, these defense stocks have been holding up pretty well.
Yeah, this one was a surprise for me today, Mike. If they break above 453, then go ahead and look at calls. I really like this level that they're sitting at right around 452, but I want to see a solid break of there. So if they break 453, then eye up those calls.
Yeah, I'm sure these defense companies are liking these increasing tensions around the world. So we'll see. But then with the last one, we have Amazon for both directions.
Yeah, ticker symbol AMZN. They've been pretty wild. So if they're able to break below the low of yesterday, right around 184.20, there was even a pretty good wick there this morning, then go ahead and look at puts to the downside. Now, if the market is marching higher and we see Amazon break above 186.50, then maybe look at calls, but definitely make the market march up if you're going to play the calls.
All right, so we have the upside level for calls and we have the downside level for puts. This is for Amazon. Don't forget about the upside level with LMT and then the upside level with UVXY. These three stocks are on watch for potential day trades tomorrow if and only if they break through the levels Tom listed. We are looking for strong, powerful, consistent moves in, said direction, and then just continuations in general. Again, these trades are only trades if they break through the levels Tom listed, but that is that, and it's now about that time for today's $680,000 big money trade of the day, and we are looking at ticker symbol FTNT. So this is a cybersecurity company. The big money today, again, put 680 grand into the FTNT 67 strike put options that expire pretty soon, which is about 30 days out. So May 10th of 2024. Looking at the stock right now, it has been struggling quite a bit around the $72 area over the past couple months, and even all the way up to like $74 a share. Given the, I guess you could say, pretty soon expiration date, that does make this big money trade a little bit riskier than some of the other ones because the options will decay quicker. They are also slightly out of the money. So the setup's not bad. It's just a little bit different than most. And if we do see a market-wide sell-off, this play can act as a little bit of a hedge. So that's good to see. But Tom, what are your thoughts?
Yeah, that is a massive resistance overhead there, right around $73.50 to $74. I mean, that is huge. What do they say? 3 strikes and you're out, right? Like that is 3 pretty big hits off of that resistance there overhead. And I don't know, Mike, it's not holding up very well here. It is getting to the bottom of the range, which does worry me. But at the same time, like if this support does start to give out, then I think we could see a larger move down. It is a shorter term play, expires in about a month. So keep that in mind. If you do play this, they must be looking for a short-term drop there. And, with it being like right around the money, I would think that we could see maybe a move to maybe 66 or 64, but I don't think it'll be too crazy with Fortinet.
All right, we'll keep a close eye on this one going forward, but market volatility is still increasing. We have the big inflation data out of the way, but we still do have some very important events to pay attention to over the coming weeks. The most important one right now is, I guess you could say, these ever-increasing tensions happening around the world, especially in the Middle East right now. It's already having a pretty direct influence on energy prices, which, remember, has an influence on inflation. So the more we see oil prices go up, the more risk it presents to the Federal Reserve and interest rate cuts and everything like that. And as we covered towards the beginning of today's video, it's looking less and less likely we're going to see some interest rate cuts this year.
It really is, Mike. Like, I still can't believe that whenever I go out to the Fed Watch tool that I'm even seeing what I'm seeing right now. Like, it looks a little confusing. At first, I thought there was going to be only one cut being priced in, but you can see in December, there's a lot of different percentages there to the cut side. But, man, like, it's insane to see July go towards a pause now. Like, I just could not believe I saw that today and that it's shifted this much in the percentages. But I do have to stress this, guys. These percentages are shifting all the time. Like, over the next couple months, every time that there's a new inflation data reading or PPI data or etc., it can move these a little bit. So keep that in mind. And if the Federal Reserve speakers say something or something, that could also shift things. But it's ever changing out there, Mike, right? The market's always trying to price in what's happening in the future. And as we know, it's an ever changing landscape.
You know that, but Tom, let's also give a giant shout out to today's member of the day, which is Tim K in the StockedUp trading floor. He did an awesome job with these SPY put options here, and he's been in the Discord for about a month and a half now. So keep up all the great work, and thanks for being a great member of the community. But again, guys, it's a great time to be a trader. Volatility is increasing. Keep those stop losses in place. Follow the money like usual, and like we said a couple times now, make sure you're not too concentrated in specific areas of the market, because when the next rotation happens, you don't want to be caught on the wrong side of it. Besides that, thank you guys so much for watching, and let's make this week a great one.